All right, good morning. It's time for another pre-market PulseWave report with yours truly, the Algo capitalist, aka the Vulcan, coming to you live from PulseWaveTrading.com, home of the world famous PulseWave price trigger reports. Okay, this morning is a special edition. This is a request that we received from one of our traders in the trading room, one of our Nordic family members. So shout out to my man Rickard Nielsen. What's up, player? Um, he he put something very interesting in the chat this morning. I'm just going to read it off to you so you can hear it. Okay, it says, would you please show the chart for the OMX 30 Stockholm at your coming show? He says, an hour ago, the whole index spiked down approximately 5% and recovered again after 1 to 2 minutes. Now, he says that he wants to get an idea of, what is going on and, what could be, coming perhaps. So we're going to do that. We're going to do that right now. We're going to take a look at this. Now, I was doing a little bit of digging around, and for those that don't know, here at PulseWave Trading, we cover thousands and thousands of securities on multiple exchanges around the world. So if you live in Norway and you want to trade stocks and in your local exchange, that's fine. If you live in Australia, we can pull up the ASX for you. If you live in Canada, you want to trade the Toronto exchange, we got you covered. So pretty much, if you want to trade equities on any exchange around the world, we got you covered. Not a problem. The pulse waves know no borders. All right. We trade multiple markets around the world. So it's rare, though, that I get a request to specifically take a look at what's happening in that neck of the woods, in that part of the world. So first of all, why don't we start with this? I'm going to pull up and share my screen here so you can take a look at this. Now, I was doing a little bit of digging, okay? So this is a little outside my comfort zone. Not familiar with this index at all, this market, but it is on our PulseWave report. So I had to do a little bit of digging. All right, right here is a daily chart of this index. Now, there is a tradable security or a group of them on the NASDAQ exchange for people who are in that neck of the woods. Keep in mind that not all tradables may be available for you if you live in the United States. So here is a daily chart. Okay. Let me just give me a quick second here. All right, so this here is the daily chart on the pulse wave. So you're looking at an actual, you're actually looking at the algo chart for this particular index. All right, again, we're speaking on the OMX. So as you can see on this daily chart, the market is already, in a bear market. You're in the red zone here, and you've been having increasing selling pressure, which is helping to extend this downtrend that you're seeing. Another thing to keep in mind too is that this is not a pointer bar per se, but it is definitely a trading range, and these type of bars tend to also act as support and resistance in any given market. So prices right now are becoming attracted to this support, and they want to test this. So this is around that 1900 mark. So we'll just call it 1900 even is a key support for this particular market on the daily chart. Flip it over to the weekly chart. All right, you'll take a look here. We are still obviously in a bear market, But something else interesting is taking place on the weekly chart. So you've been in a bear market on the weekly chart, and that's plain to see here. But you've put in a short-term bottom. This particular bar looks similar to the one on the daily chart because this is that same bar. And the support is at 1900. So this is a support bar where the market based a technical bounce. You can see in the following week, you got that immediate upside production. You had a continuation pattern to start the next week off, and then the market proceeded to drop, to pull back, all right, toward its breakout support. Then the market started to move a little sideways, and then the momentum started to wane. All right, this is you're still in a technical bounce, but the market started to drop, and then you gapped down on this particular in this previous week, or the most current week, I should say. So this is where the price action has been, and this is telling us where it's trying to go. One thing to note, on the week ending April the 8th, you put in a rally alert. So we were looking for a continuation rally the following week. We got nothing. No upside production. The market proceeded to move lower. Then here, just when you thought that maybe, okay, maybe the market just needs a few days, and then here it was looking a little hopeful, you took out the prior bar's resistance, but you did it on a spike, creating a bullish pointer. And exhibit A, this bar and this bar, two bullish pointers, within a 4-week period. Then you ended the prior week here with a bearish pointer. Again, giving more credence to the idea that you're going to be having a sideways consolidation market in the days, weeks to come, because this consolidation bar here, exhibit B, which is the week ending March the 11th of 2022, is letting you know where prices are going to be attracted to. This is going to be the low end of this bar, near the opening of this bar. This will be like a psychological support, and the closing of this bar is going to be your psychological resistance. So you're going to trade between the open and the closing range of this bar for the foreseeable future. That's why prices started to pull back down into it. And even though you still have the blue reading on these bars, which is a consolidation or a correction off of a support, you don't see any follow through. So interesting. The bulls were just not strong enough at this time to regain the rally. But another observation should be noted here as well, and that is the enormous range of your Kumo cloud. So you're up here almost at the 2350 on the resistance side, and you're at let's call it 2100, or we'll call it 2050 on the bottom side. So that's a very, very wide trading range. And this again gives further fuel to the idea that you're going to be range bound in this market for some time. Now, this is the actual algo chart on this particular situation. Now, let's take a look at what happened in the early morning hours where everybody was sleeping. This is going to be very telling. So what you have here, which is odd, I will admit it is odd, wrong screen. So we need to dig into it. All right, so before you is our panel of today's market activity. All right, so exhibit A is the top chart here. This is the daily chart. Notice you see the spike down here, all right, making a massive bearish pointer, but this is a flash crash, okay? How do we know that? Well, if you come over here and look at this 4-hour chart and then compare it to the 1-hour chart, the market was just moving around, moving, eking a little bit higher, just fine. Not a lot of volatility or anything, just moving nice and quiet. But then something crazy happened. This is an hour chart, 1 hour chart. So around 11 a.m. Nordic time, what you saw was out of nowhere, once this bar right here closed, it was a very narrow range bar, not a lot of noise or anything, just a very narrow range, quiet bar. And then the next thing you see here is this incredible flash crash. And this is a 1 hour chart. Look how parabolic the market went. And it didn't stop there. All right. The market crashed and chilled there for a minute. And then once this bar, finished, the market crashed even more and went all the way down to 363.94 and then proceeded to rally immediately and then pick up where you left off at, but not all the way just yet. Look at this. You still didn't close this gap. You went up like you were going to, but you did not close this gap. I repeat, you did not close the gap. Okay. And then the market fell back down again, pulling back even more. So something is definitely going on here. This is reminiscent of May the 6th, 2010, when the United States experienced its flash crash. And it looked just like this, almost identical. All right. And you have to figure out what happened or what is going on. Not every flash crash per se is, based on some type of breaking news or event. And this is also another unique situation. I just finished talking about this the other day when I was warning everyone that the next powerful, type of a move, a flash crash, whatever you want to call it, was going to come without warning. You were going to get no warning whatsoever. It was just going to happen. No news. It was just something that was going to happen. I just finished saying this before today. I just finished saying this. I mentioned it in the trade journals. I mentioned it in the pre-market. I mentioned it in the end of day report. I just finished talking about this same thing. Now, these patterns, these algorithms have almost a musical nuance to them. So I understand why Victor Niederhofer thought that he could create a trading system based off of the musical note algorithms to classical pieces from like Beethoven and Bach. I understand that now because he was looking at the price points as pieces of sound waves. So looking at sound wave technology as it applies to reading musical, sheets of music and a rhythm. So he spent a lot of time looking into that, and he did find some similarities. And now overall, this strategy just had too many points of breaking down, but he was onto something. Okay, so repeatable patterns. Now, do you notice something? This chart down here is a 1 hour chart. This chart up here is a daily chart. Do you notice the similarities? On the daily chart, right here, April the 21st, right? Next, we had April the 22nd. But something happened. The market gapped down on the open and proceeded to go lower. Instead of back and filling, it continued to fall apart. Then the market cooled down for a bit on this day, cooled down a little bit on this day, made you think it was going to continue to go down, gave people some hope, because when this day ended, the next day you broke out to the upside, only to come into now with this gap down spike move. This daily chart is having its price point pattern repeated on today's intraday chart, almost identical. Again, look at the breaking points between the breaks. Look at the points between the breaks. Look at the preceding bars as well. You had this one, and then you had this two. These two bars, including this third bar here, represent just these two bars on the hourly chart. And then you had the one and the two before the next drop. You had the one, you had the two before the next drop. All right, if I went too fast, let me show you again. This is a repeatable, they took a daily chart algorithm and made it repeat itself on an intraday level with the same identical wave points. Again, bar one, bar two, bar one, bar two. Then we had the gap down, right? And then we had a preceding bar. All right, but these three bars represent these two bars. All right, then you have one up, two up, drop. Same thing here. Here's your down bars. One up, two up, drop. Are you seeing the repeatable pattern here? So in other words, this was not a mistake. This was not a fat finger. Some whale didn't, fall asleep at his PC and, collapse on one of his keys and made this happen. No, things like that cannot happen because of the fail safes built into the market. If it was that easy to push U.S. markets or any other country's markets around like that, they would close the markets before they allow that to happen. So all these fail safes have been put into these markets, but the mainstream media will have you believe that we're still in 1995. This ain't 1995. All right. What happened was a global meeting took place, if you will, on 9/11. Right after 9/11, the G8, the G7, the G20, everyone got involved, had those backdoor closed meetings and said, we need to insulate ourselves from this, because if your exchange collapses, your economy collapses. Okay. So they made provisions to insulate their markets. Okay. But with that being said, anytime they need to manipulate price action up or down, they can do so rather easily for whatever purpose that they're striving at. Remember, the push toward total control in every area of life got its birth, all right, its inception from 9/11. Just remember that. Because of 9/11, now a lot of exchanges have the brain of their operations off campus, all right, spread around in different secret facilities. And so if there's ever an attack where a major exchange is located, it will not cripple the economy or destroy the country because their servers and backup servers are located off site. All right. So this repeatable pattern was done on purpose, just like May the 6th, 2010. But the day is not done yet. I don't believe their markets have closed yet. Rickard, you can let me know if that's the case. But even still, this is a massive bearish pointer. What do we learn about bearish pointers? They have to be reconciled. Here, you have that similar bar I showed you on the Algo chart, which represents none other than a consolidation bar, not a pointer bar. Therefore, price action was attracted to this support low. That is the trajectory of what you see here. So this is not over with yet. This support they're gunning for, and they're going to take it out. Will the market stay down after that? I have no idea. All I know is that price action they're gunning for this support. This support low is in play. So this is just the first spike. The same thing that happened after May the 6th, 2010. The market, after that spike low, the markets proceeded in the days and weeks ahead to move back down to the low made on May the 6th, only to take that low out. All right. So remember that pointers and gaps have to be reconciled at some point. Here, you did not reconcile this gap, and this gap here also, you know, well, it was done intraday because this one here, but still, this gap has not been reconciled. All right, and then you have this spike here to deal with. So I had to show you this, all right, because this is interesting that this is happening on the other side of the world, and it did not happen here. So you have to ask yourself, why is that? What's going on? Well, first of all, where is this country located? Well, this country is located over there, not so far away from where all the drama is taking place. Now, I don't know all the intricacies of that area and how this particular exchange or index is positioned, but needless to say, you have to go where the evidence leads you. And this right here is saying that something is going on. A signal was sent, a message has been sent. And we need to figure out quickly what is that message and to whom is that message to be sent. Now, doing my preliminaries, just taking a look at some basic stuff. Let me just share with you what I found out. This was what I was just looking at. So take a look at it. So here you can see this is the OMX Stockholm 30 index, right? And as you can see, this is the Yahoo Finance. I like Yahoo Finance because I'm an old head, and traditionally Yahoo Finance does pretty good with their you can pull up any stock you want, and it'll give you all the news and stuff with it and recent stuff that's going on. So here's what it is. Here's this gap down early this morning, only that bring the market right back up again. It's almost as if this was a test. You know how when you're watching TV, and nowadays it used to be just regular TV, but now since everything's been digitized and what have you, even on cable it happens. You could be watching a movie on cable or whatever, and all of a sudden you get that test of the emergency broadcast system, right? And it says, this is a test. This is a monthly test that we must do according to the federal government, blah, blah, blah. Well, that's what this looks like. Like this was some kind of a test to test the market to see if they had the ability to bring it down and bring it back up again. And, they're testing. Someone's testing this. For whatever reason, I have no idea, but this is a test, and I think it's pretty obvious. Come over here, take a look at, this is the NASDAQ's website for all of our Nordic brethren, all right? So this is the ticker here, the NASDAQ OMX Nordic.com, all right? And this gives you the ETFs, all right, for this. And this is under the ticker SEK, and then here's the full name here, like the exact bull 2, the exact bear 2, and here's the exact OMX 30 ESG UCITS ETF. What I don't even know what all this stuff is, but here's the Norden Haugalandie. I'm sure I'm destroying that name in the pronunciation, but this is what's going on. And then they're showing you the advancers and the decliners in this segment. Obviously, the bulls are getting hurt because they flash crashed the market down. All right. So just wanted to show you, I was looking into this because I was really wanting to see. Okay, here's the Financial Times. Okay. Financial Times is another triple OG of financial newspapers. It's up there. It's on the same level as the Wall Street Journal, or the Economist magazine, or Investors Business Daily, Futures magazine, Stocks and Commodities magazine, the Futures magazine, the There's another one, but the name of it eludes me. These are all the triple OG papers. Oh, Barron's. You know, these are the tried and true market newspapers and magazines that all the who's who, real traders, real dudes like me, old timers like me, who go back. Um, these are our old school, tried and true resources when we want to do a little bit of market research. That's where we go. So we go to Wall Street Journal, we go to Barron's, we go to Investors Business Daily, Financial Times, Economist Magazine, Futures Magazine, Stocks and Commodities Magazine. That's where we go, because each one of these institutions have certain things and features that some of the other ones may not have, that come in handy in the biggest of ways. That'll be a whole nother video to explain that part to you. But anyway, on the Financial Times site, it has the iShares OMX Stockholm capped UCITS ETF. Okay. And has the information here, just what's going on. This is a 6-month chart. And then here's the objective of the fund. The investment objective of the fund is to seek to provide investors with a total return, taking into account both capital and income returns, which reflects the return of the OMX Stockholm benchmark cap TM. Now, whenever I think Stockholm, I always think Germany. If you guys can correct me in the chat if I'm ignorant to that, but that's just what I think of when I think of Stockholm. Stockholm syndrome. That's what I think. Just comes into mind. I could be off. Maybe this is a different Stockholm. I don't know. The price currency is this SEC, like I was telling you. I'm sorry, I said SEC, SEK. So it gives you all this little, stuff here. Top holdings of the fund, things of that nature. Again, this is markets.ft.com. Okay. And that's where I'm at on this one. Then I went over here to the iShares website, and I got the iShares OMX Stockholm capped units one, and this is on the iShares site. This is the iShares.com UK region, okay? And then you can read this whenever you feel like it, what's going on, blah, blah, blah. But as far as news, I couldn't really find anything. And this right here is the NASDAQ, OMX.com. And here's the financial advisors handout, indexes and exchange traded funds. If you guys want to look into that, that's right here. Okay. And then last but not least, here's another big site. This is ETF.com. Anything about, they cover the world of ETFs and they break it down. But this was interesting to me. Now, I could be off base here, but I miss nothing. I examine everything, and things that I see, they happen for a reason. They don't just happen in a bubble or vacuum. But as I was searching this whole the OMX situation, I came to this one. This was the last site I came to, ETF.com, because they handle ETFs. I want to find OMX ETFs, so I could get an idea of what our brethren over there is dealing with. And this came up: the NASDAQ OMX US Water Index ETF. Remember I talked to you about ticker PHO and PIO? All right. Well, this is the PHO, Invesco Water Resource ETF. This came up. NASDAQ OMX US Water Index ETF news. Infrastructure bill to boost ETFs. ETF battles. Water ETFs ride big wave. Why water ETFs may belong in your portfolio. ETF watch for issuers launch. Best of 2016. Daily ETF watch water fund, socially responsible. Water is coming up under the OMX banner. Water. Okay, Jim in the live chat says Stockholm is in Sweden. SEK is Swedish Corona. See, we got the most intelligent listeners in the world. They listen to the pre-market PulseWave report. Thank you, Jim. High five. Good looking out. I'll leave this up here for a while. So anyone new coming in, we're talking about the OMX today. Our Nordic brethren in the trading room wanted to know what was up, because there was a flash crash this morning. It happened without news, like I always tell you guys. I was just talking about this a few days ago about when flash crashes and things like that happen, they come without warning. There's no news before it happens. It's only news after it happens, not before. Big difference. All right. So I'm just kind of perplexed that this ETF has the acronym OMX in it. You know what I mean? Just something to think about. Just, I don't know. Maybe this is not going anywhere, but the fact that this came up while I was looking into this morning, I cannot ignore that. All right, we don't ignore things over here at PulseWave Trading. We examine everything. We go head on, head in. We don't play around. All right, we don't avoid difficult subjects or topics. We deal with stuff. If I don't know something, I say I don't know. I don't pretend like I know. But that's why we have the best and brightest minds in the world of finance at pulsewavetrading.com. We got traders from all over the world, investors from all over the world. And that's how we stay abreast of what's going on. That's how I knew about this flash crash. They're not talking about this on the Bloomberg or CNBC this morning or Fox Business. Of course not. They're talking about everything else. They've been talking about this morning? Rate hikes. How much is the Fed going to hike rates? A quarter point, 50 basis points, 0.75. What are they going to do? A point and a half? Or they just going to throw the baby out with the bathwater and say, "Oh, forget it. Let's just raise rates 8 points and be done with it." I'm going on vacation. I'm turning off my phones and I'm locking it. The Fed's locking the door at the Federal Reserve. No one's home. We're going on vacation. Leave us alone. Here's an 8-point rate hike. There you go. Are you happy now? Who knows? Will they do scorched earth? Who knows? But again, I can't turn away from the OMX thing this morning. And then the water. There's been an escalation in chatter over the internet about the global financial crisis as it has to do with food shortages. I covered last week the so-called coinky-dink of all the food manufacturers exploding and catching fire. I mean, if this was any other time in U.S. history, this would be on every news station in the world, and they would be like, "Okay, we're under attack. We obviously have some type of Al Qaeda cell operating in the states. We need to do something about this. We need to bring in the military, bring in the Marines. Somebody do something. We need to do something." All right, but you see them doing nothing, and they're just letting it rock, which means that they're the ones behind it. Because when in such a horrific circumstance we find ourselves today, when have you ever known the government to ignore anything on that nature? Are you serious? So whatever. This is important because this is an attack against America's food supply, and it's not cool that you also got drought in the Midwest. And then on top of that, now you got supply chain issues where you got food, but the food can't get to where it needs to go for whatever reason. Not enough people driving the trains, not enough people driving tractor trailers, not enough airplanes hitting the sky, not enough ramp workers to load the cargo aircraft. It goes on and on and on and on and on. Not enough people working at the warehouse, not enough bodies on the ports to bring in all the ships. I know you guys saw the news about where they showed the picture of all the barges off the coast in China, hundreds and hundreds and hundreds and hundreds and hundreds of vessels just chilling on the ocean. They can't go nowhere, can't dock, can't port, can't unload, can't offload, can't do nothing. That's a problem, ladies and gentlemen. That is a problem. All right. That's analogous to someone grabbing your arm and squeezing it so hard that it cuts off the blood circulation to that particular part of your body. Would that not end in a catastrophic event for you? What happens when an organ doesn't get enough blood flow? That organ dies. Well, our supply chain is the arteries and the lifeblood of our global economy. If you cut off or tie up or block any of those major arteries, then the blood stops flowing. And when the blood stops flowing, the organ dies. All right. So we need to be mindful of these things and not take stuff, for granted or at face value, like, that's on another part of the world. That has nothing to do with me. So the OMX had a flash crash today. What does that have to do with me? We should not look at it that way because we're a global people now. We're no longer just individual nations because they're quickly bringing us to the one world government. So what happens in one place of the world affects the entire world because everything is interconnected. Always remember that, ladies and gentlemen. Okay. If something, I've seen it time and time again where the day session in New York will close, stocks could be up or down or nothing, flat, whatever. And then when the Asian markets open and when London opens, we could have a problem. Something could happen, and their markets could be down 5 or 6%. What do you think New York is going to open in the following day? It's going to open up 5 or 6% down. All right, that's just how it is. All right, what happens on one side of the world affects the other side. All right, just like the human body. If I injure my hand, the rest of my body is going to suffer as well, right? It's just how it is. Everything's connected. Now, my foot may not ache if I injure my hand, but it's going to affect the body as a whole, right? So you got to think about these things as we move forward. So I had to come on here with this pre-market PulseWave report and address this, especially after one of our traders brought it to our attention. Now, since we are on this, we can get off of this, for now. We get off of this now. I think we're done on this part of it. But now we need to address something else that's happening right now. So let me go ahead and show you the next screen because, again, we got to deal with this stuff, man. Something's wrong. And if people don't see it, then they're gonna be in trouble. You got to open your eyes right now. You can't pretend like you don't see things that are happening, or that it doesn't affect you, because at the end of the day, it affects us all. And you would do well to wake up. Okay, so coming into today, as you can see here, this is the real-time quotes of the what's going on in the futures markets prior to the New York Open. So let's go there. Right now, the U.S. dollar index is at 103.49, right near the highs of the session. We hit an overnight high of 103.55. You got the euro right now down 57 pips at 105.32, and there is talk now, after all this time, when I was the first one to talk about it, but now the business networks want to discuss the idea of the euro hitting parity. All right, it could drop the parity. I talked about that and have been talking about that for years. But now they just now want to talk about it. Remember, the business channels are always late to the party. They waited till the euro hit 105 to say, oh no, could it go to parity? I started telling you about parity when it was in the 120s. Remember? The pound sterling is down 52 pips at 125.47. The Aussie is off 32 pips at 70.55. Bitcoin futures are up 420 at 38,705. Ethereum futures are up 23.5 at 2,807. The crude oil, I really wanted this. Remember in our in yesterday's report, I wanted to get that, but I had to finish doing some things. Remember we talked about it. Well, this one triggered our short this morning at 104. And now the market's at 101.07 after hitting $100.25 a barrel. So already that trade has paid off. Anyone who took that trade, if you're debating of booking profits or not, debate no more. Go ahead and book your profits. Never go broke taking profits. Nat gas, all right, is up 7 cents at $7.32. Gold futures is the story of the morning for the U.S. markets. As I talk to you right now, gold futures are down a whopping $51.50 an ounce, trading at $1,860.30 per ounce. That's right, ladies and gentlemen, per ounce. We just covered this before the markets opened in our Sunday edition of our pre-market PulseWave report. Did we not? Did I not warn you? Did I not warn you? Did I not warn you? Silver is off 66 cents at $22.42. We talked about that as well. Dow futures are up 64 points at 32,946. The NASDAQ 100 off 13 and 3/4 points at 12,840 half. E-mini S&P 500 off 3/4 of a point at 4126 and 3/4. Russell My Hustle down 1.7 points at 1859.60. The other story in the market today is the long bond, which is off 1 full point and 930 seconds, trading at 139 and 1330 seconds. Ouch. Soybeans off 13 cents at $16.71 a bushel. Corn off 8 cents at $8.05 a bushel. And wheat off 6 cents at $10.48 a bushel. We still got beans in the teens, and wheat is still trading over $10, and corn is trading over 8. To give you some perspective on this, soybeans are trading at 400% price increase since 1999. Corn is trading at 400% increase as of compared to 1999, and wheat is trading over getting close to 300% higher since 1999. Again, those are not single digits or double digits. Those are triple digits. Hundreds of percent increase in food. How can there not be hyperinflation? You can explain that one to me. How can we not have, how can you argue that there is no hyperinflation when corn, wheat, and soybeans are trading at hundreds of percentages higher than they were this time in 1999? How can you explain yourself? The 200 plus year historical average for the price of wheat is $4. Today, wheat is trading at $10. Come on, man. You can't be that naive to think that there is no real inflation. Now, of course, the government loves to lowball bad things, and they like to round up good things. So if the Dow is doing well and is up 100%, they'll tell you why it's going up 10,000%. If the Dow is down 1,000 points in pre-market before the New York Stock Exchange opens, they'll say, okay, so it's only down 1,000 points, but let's be honest, the Dow has risen 30,000 points since 1987, so we're doing great. That's just how they do. All right, that's just how they do. So putting all this stuff into perspective, we are staring down the barrel of chaos from a global perspective. Chaos is being allowed to reign. I want to talk to you now about some of the near-term possibilities and ramifications of the nonsense. If this nonsense goes unchecked, we are looking at some very difficult times ahead. It's not bad enough that since March the 9th of 2022, gold is down over $100 an ounce. And that's just since March the 9th of this year. It's off $100. an ounce. You can't make this stuff up. This is what is happening to your reality, boys and girls, ladies and gents. So now you have to ask yourself another question. What does all of this stuff mean? Where do we go from here? And how bad do you think things can really get? Well, trying not to fearmonger, trying to avoid fearmongering. I don't like fearmongering, but at the same time, you can't avoid talking about difficult subjects either. You just can't. Okay. You just can't. You have to deal with it. Okay. And one of those facts that we can no longer avoid, ladies and gentlemen, is the question that we must ask and we must answer it for ourselves. Is the United States of America going to transition from stagflation directly into a full-blown economic depression? That is the question that you must seriously ask yourself. It doesn't matter that the fact that the U.S. economy actually contracted during the first quarter, and now it's depressing economic activity all over the planet. Of course, this has nothing to do with it, right? But what we are facing could most definitely be described as a perfect storm. And the truth is that this storm isn't going to go away any time soon. But where do we go from here? Will the U.S. economy bounce back? Can it bounce back? Will it bounce back? Or will this new economic downturn soon become even worse? Ladies and gentlemen, are we about to experience a major leg down, not just in the market, but in the economy? Most economic optimists are assuming that the former will be true, while many economic realists are issuing dire warnings about what is ahead. Okay? Think about this. Our gross domestic product unexpectedly declined at a 1.4% annualized pace in the first quarter, marking an abrupt reversal of an economy coming off its best performance since 1984. The Commerce Department reported this last Thursday. And again, did you peep the reference to 1984? The negative growth rate missed even the subdued Dow Jones estimate of a 1% gain for the quarter, but the initial estimate for Q1 was the worst since the planned scamdemic induced a so-called recession in 2020. We already knew that inflation has started to spiral out of control in the United States, and now the stag part of stagflation has arrived. So what caused this sudden downturn? Well, according to the fake news channel CNN, there are quite a few factors that can be blamed. Firstly, a push by the Federal Reserve to raise interest rates and combat high inflation, supply chain shortages, an ongoing global health crisis, and of course, the geopolitical earthquake caused by Russia's invasion of Ukraine, which is also threatening to create a world food crisis, not to mention laying the foundation for World War III. Now, if the U.S. economy shrinks again in the second quarter, that will officially meet the definition of a recession. Now, the talking heads are already, dismissing the R word, recession, because the yield inversion effect corrected itself. And the bonds, the interest rates are no longer inverting. So the threat of a so-called recession within the next 18 months is now off the table, according to them, the talking heads. But as John Williams of Shadow Stats has pointed out, if honest numbers were being used, which they are not, notice the word if, the U.S. economy would still be in a recession that started all the way back at the beginning of the planned scamdemic, which means you would have to rewind the clock 24 months and go back to 2020. Everybody pretty much realizes that economic conditions are not great right now. So a brighter day is just around the corner. Well, that is what some talking heads in the mainstream media believe. They believe the U.S. economy will return to growth during the second quarter, according to RSM chief economist Joe Brusalis. Without a doubt, he said. So he says, without a doubt, no doubt in his mind that this is happening. No doubt in his mind. It's a fact. Foregone conclusion. He says that this is noise, not a signal. Pantheon Macroeconomics chief economist Ian Shepardson wrote in a report, the economy is not falling into recession. Notice the emphatics that were implied here. The first one said without a doubt, no doubt, not even a cause for concern. And then the second one said the economy is not falling into recession, is not, emphatic, declarative. It's not. It's a fact. It's not, according to these comments. Excuse me. So according to them, it is a foregone conclusion. It is factual, actual factuals. You know, they spit in the actual factuals that it's not going to happen. It's not happening. Remember, these are the same people that when Peter Schiff was sounding the alarm, the redcoats are coming, the redcoats are coming. Everyone said, you are a nut and a basket case. Go back to the rock you were hiding under. You are a fool. You are the town idiot. He says, no, I'm not. Sticks and stones will break my bones, but your name calling will never hurt me. The housing industry is about to implode, and you're not doing anything about it. And then what did the heads at the Federal Reserve say? They said, this is all foolish talking. It is not going to happen. It cannot happen, and it will not happen. And then after Peter Schiff was proven to be correct, they came out and said, well, no one could have seen this coming. But how can you say that with a straight face when Peter Schiff was coming on, was doing the rounds all over mainstream media and the internet, warning and sounding the alarms? He kept saying, it's coming. You don't understand. It's going to happen. It's going to be bad. And they said, you obviously are off your meds. You need to go take your meds, Mr. Schiff, because right now you sound like a crazy person. Right? Made fun of him. And then after it happens, instead of giving the man his props and bringing him his flowers while he's still alive, they say no one could have saw this coming. And they testified on Capitol Hill. We didn't see this coming. Well, let's just put on our rose-colored glasses and assume that maybe they will be right and that all is well. But if the economy is so strong, then why or foreclosed month 33 across the U.S. face foreclosure, a 181% jump from March of 2021 and 29% pop from February, according to a report by foreclosure tracker Atom, spelled ATTOM. The first quarter saw 78,271 properties with a foreclosure filing, a 39% from the previous quarter and 132% from last year. Let's stop right here. I have said this for years, and I don't think people are really catching on to what's happening. So let me spell it out for you, ladies and gentlemen. See, this is what we call myths versus facts. Myths versus reality. Fantasy versus reality. I want you to think about what I'm about to say because I think I speak the English language with at least some degree of clarity, do I not? Well, here we go. Now, I'm sure some, if not many of you, under the sound of my voice this morning, will be able to relate to what I'm saying because I'm sure some of you out there own a home. Some of you out there may even own a timeshare. You may own an investment property, a vacation home, second home, some form of real estate, whether it be law or raw land, commercial property. The list goes on. So you will be able to explain and understand what I'm saying. You'll be able to not just understand what I'm saying, but overstand what I'm saying to you. Okay. And I'm only talking about tradition. I'm talking about vanilla, A paper, organic, commercial lending and lending period from the traditional banks. We're talking about traditional banks, not the little specialized boutiques. We're talking about as a whole. The fact remains, even to this day, even if you take into account 2006 to 2008, the majority of loans that are distributed in the United States of America are good credit score loans. FICO's above 720. Yes, there's a large amount of loans that go out at 680. There's even some around the 620 mark. Those tend to be like your FHA loans, things like that. But even they like to see a 720 FICO. 720 FICO is the average good credit score that will open the door for you at most traditional banking institutions, even some of the most conservative banking institutions. You got a 720 FICO, they want to talk business with you. Okay. That's the traditional way. All right. And that's even with even FHA. FHA got a lot of bad rap and bad press over the years for a myriad of reasons. But you got to give the FHA their props because FHA still requires, even to this day, that the typical average borrower bring some money to the table. Doesn't matter if it's 3%. It's still, you got to come to the table with some money. It's not 100% financing. And it never really was. It was always, give me 3%, you know? Even if you were to go the conventional route, they still want 20% down payment. All right. So when we're talking about the mortgage industry as a whole, from a puritanical perspective, from an organic historical perspective, mortgages have always been for the middle class of the population. Those individuals with good paying white collar type career jobs or the higher earning blue collar guys who've been on the job nearing retirement age. As a matter of fact, for at least a 50-year period of time, going back to the mid to late 90s, the average age of the first time home buyer was age 40. All right. That was the age of the first time home buyer. The average age of the first time home buyer was age 40. And that goes back to the industrial age where a blue collar family could survive off the one income of the blue collar worker. You could raise a family and live in a nice little house, in an average suburb and have a pretty good life and retire with a full pension. Okay. Those days are long gone. All right. So historically, mortgages were for people that had decent credit and had really, decent jobs to the point where they could bring money to the table for down payment and closing cost. All right. Your loser doesn't have 20% to put down. All right. Your underemployed individual doesn't have 20%. And they're not going to have a 720 FICO. A person just starting out in life, all right, a college, student is not going to have a 720 FICO. A college student is not going to be typically a person who has established credit. You're just starting out in life. You just graduated high school. You're not going to have a 720 FICO, and no bank is going to lend an 18-year-old who just graduated high school 100 grand. They're not going to do it. The bank will laugh at you and say, come back in like 10, 20 years. Then we can talk. Once you graduate college and you got your 10,000 hours in your career, then we can talk. All right? But then something started to happen, ladies and gentlemen. People got greedy and they saw that they could make a lot of money because the federal government stepped in and said, you know what? The bank may not give you, Mr. and Mrs. 18-year-old, 100 grand loan, but I will. I'm your favorite uncle. Remember? It's me, Uncle Sam. Come sit on my lap. Let me bounce you on my knee. Sam, don't you think we're a little too old for that? Nonsense. Come and sit on my knee. If you want me to give you this money, you're going to come sit on my knee. Okay, fine. Let's play horsey. All right, so Uncle Sam says, since Bank of America will not give you a personal loan for 100 grand because you just graduated high school, you have no credit and no job, I'm going to do it because I'm your favorite uncle and I love you. All right? So he gives them $100,000, not to buy a house. No, it's not a mortgage. It's a student loan. So you can go to college and get a degree, and not just a bachelor's, but give you the opportunity to even get a master's or a doctorate in counting potato chips and painting Skittles. That's right. You can go to college and get a degree painting Skittles. Look, mom and dad, I just graduated, and I graduated ahead of my class. So what did you major in? What are you going to do? Oh, I'm going to be painting Skittles for a living. Okay. What about you? What are you going to be doing? Well, me, I'm going to be backpacking through Europe, and I'm going to paint everything that I see. Oh, so you're accomplished. You're a painter, huh? Well, no, I suck, but this is something we're going to do because that's just what I want to do. But don't you have $400,000 in student loan debts that you need to pay back? Oh yeah, I'll get around to it once I find myself. I need to travel around Europe. I need to backpack through Europe. I need to, spend some time being a beach bum for a couple of years. I got to find myself. That's the situation we have today. So because of the student loan situation, it has skewed and kind of muddied the waters a little bit. All right. Then you have the whole subprime loan situation, and the whole subprime market has been the whipping boy of the real estate and mortgage crisis since the early 2000s. All right. But they are not the cause of the housing bubble collapse in 2008. I've talked about that at length throughout the years on this channel. They want to blame the subprime mortgage buyer. All right. Did they default? Yes, most of them did. But what they're not telling you is that a majority of the deadbeats were the people with the nice FICO scores of 720, 780, 800, 850. Those are the ones that were also going belly up. Now they don't want to talk about that. They don't want to talk about that. And I'm going to tell you why, because there's a dirty little secret in the real estate game, in the mortgage game, that no one wants to address and talk about. But I'm going to address it right now for you. Everyone can agree. Let's just find a common ground. Can we at least agree that in order to rent an apartment in the United States, you do have to have a good rental history and good credit? Can we agree? All right. There's no such thing as a subprime rental, apartment rental. We call that the ghetto. And even in the ghetto, they want you to have a good rental history and actually good credit, believe it or not. So we can at least concede that, right? Those of you who are landlords out there that are listening, you can relate to this. You are quick to rent your property to someone that has a good job and a good, uh, credit history and a good FICO score. Am I right? You will rent to the guy that has a 720 FICO before you rent to the guy that has a 350 FICO, right? That's a no-brainer. We agree on that. So then explain this to me. How come the average landlord and tenant court throughout the United States is so full of people getting evicted? Now, before you answer, I want you to think clearly about your answer. If only people with decent credit and good rental histories can rent the average apartment in a nice middle class suburb in America, why are there so many people in landlord tenant court being evicted? If you only rent to people with good credit, you see where I'm going with this? That's the dirty little secret in the real estate and mortgage game. And that dirty little secret is credit has nothing to do with it. FICO score has nothing to do with it. Job has nothing to do with it. And that is the truth. They will never admit it. But if you only rent to good credit people, why are you always having to go to landlord tenant court? It doesn't make any sense. So who are the real deadbeats? It's not the subprime. There's no such thing as a subprime, renter. And I'm not saying the ghetto, I'm not saying the hood, because even they have higher standards these days. But I'm talking about just in general, suburbia, middle class folk. Why are so many of them in landlord tenant court? And don't say, well, because of the scamdemic. Nope. I'm talking about before 2020. Let's start from 2019 and go backwards from there. Okay? Let's be honest. I want you guys to really put on your thinking caps, put on your big boy pants, your big girl pants, roll up your sleeves, and exercise some mental alchemy. All right? Exercise that mentality. Understand what I'm saying to you under the sound of my voice. Can you do the knowledge to this? If only people with decent credit can get a loan from the bank these days, why are there so many foreclosures? Why are there so many people in landlord tenant court? Why did the federal government see the need to step in and put out moratoriums on evictions? I do not remember the federal government ever doing that in my lifetime. But they did. They did. There was no eviction moratorium or foreclosure moratorium when the AIDS epidemic exploded in the late 80s. There was no moratorium. There was no moratorium on rents and foreclosures on 9/11. There were no moratoriums on evictions and foreclosures when the housing bubble imploded and bursted and exploded in 2008 and 2009. Huh? So, how do you explain it? How do you reconcile these issues, these opposing arguments? How do you reconcile them, ladies and gentlemen? Please tell me. All right. That's what they don't want you to know. Okay. Last month, 33,333 properties across the United States faced foreclosure, a 181% jump since March of 2021. How do we reconcile these things? If the economy is strong, if the job market is so strong, how do you explain this? You can't. Needless to say, there are other experts that have a much more negative view on what is coming and what's ahead. For example, Nancy Lazar is warning of a synchronized global recession. Piper Sandler, chief global economist Nancy Lazar, warned on Monday that the world is in the early stages of a very significant and synchronized recession. Did you hear the choice wordage in the statement? Very significant, synchronized. The last time I checked, the word synchronize has both the cognitive understanding that it means something that is controlled and rehearsed. Let's synchronize our watches. The act of synchronization begs to reason that some type of manipulation is taking effect. You have to manipulate your watch in order to synchronize it with someone else's watch. Synchronized. You ever seen synchronized swimming? Do you know how much training and planning goes into synchronized swimming? That is an athletic pursuit. It's a sport. Synchronized swimming is a sport. Not only do you have to be an excellent swimmer, but you have to be in all types of mad shape to do all those wonderful, incredible, complex and patterns and things that they do in that water. It's not easy. It's not easy. Okay? Synchronized swimming is rehearsed and planned before the actual presentation to the world. So if we're having a very significant and synchronized recession, and then you use the word global and world in the same sentence, that means that the nations of the world, the G7, the G8, the G20, have come together behind closed doors to say, let's agree to implode our economies to bring forth our New World Order agenda. So, in an appearance on Mornings with Maria, Lazar noted that a recession is expected outside of the United States. I wonder, does that have anything to do with the fact that the euro currency is headed toward parity? You see, it's going to be a global recession pulling down the Eurozone in particular, she told host Maria Bartiromo, aka the Money Honey, from her CNBC go-go days in the go-go 90s. It looks like China's GDP, gross domestic product, in the second quarter could also be negative. Actually, if all we suffer is a significant global recession, that will be really good news. Because right at this moment, inflation is dramatically spiking all over the globe. We're witnessing the largest land war in Europe since World War II. And the UN is telling us that we are headed into a horrific worldwide food crises. An increasing number of Americans are starting to realize that things are moving in the wrong direction. In Gallup's April survey, only 18% of Americans rated economic conditions as good, and only 2% rated them as excellent. The GDP news comes on the heels of newly released polling data from Gallup that suggests that economy confidence is extremely low among the American public. More than 4 in 10, which is 42%, of Americans said that economic conditions in America were poor, while another 38% said they were only fair in Gallup's April survey. Just 2% said economic conditions were excellent, while 18% said they were good. Are you seeing a pattern here, ladies and gentlemen? Those are terrible numbers, and they have very serious implications for the Democrats, and particularly in the fall. But instead of focusing on fixing the economy, Joe Biden wants Congress to give him another $33 billion for the war in Ukraine. Are you noticing another pattern, PulseWavers out there? We keep hearing the word 33 this morning. $33 billion. 33,333 foreclosures. 33, 33, 33. Pattern, anyone? President Joe Biden is asking Congress for another $33 billion to help Ukraine resist Russia's invasion and provide humanitarian aid to the Ukrainian peoples. The proposal, which the White House will send to lawmakers on Thursday, includes $20 billion in additional security and military assistance for Ukraine, another $8 billion for economic assistance, and $3 billion in humanitarian aid. This is a complete and utter madness. To put this in perspective, the military budget for Ukraine is normally about $6 billion for an entire year. And much of the equipment that the U.S. is sending to Ukraine is being blown up by the Russians before it can even get to the fighters on the front lines. With each passing day, it is becoming clearer and clearer to not one, not two, but everyone that this is conflict, and this conflict is really a proxy war between the United States and Russia. And nuclear war is increasingly becoming one of the hottest topics on Russian television. For example, the following is a recent exchange between two Russian television personalities that is making headlines all over the globe. Quote, everything will end in a nuclear strike is more probable than the other outcome, she continued. Quote, this is to my horror on one hand, but on the other hand, with the understanding that it is what it is, end quote. It was at that point that Slavyov chimed in and said, but we will go to heaven while they will supply croak. That is a funny statement. So we will go to heaven while they will simply croak. Really? We're all going to die someday, they agreed. We're all going to die someday. I don't think I like the sound of that one. Unfortunately, many Russians are now entirely convinced that nuclear war is coming. Not may come, not probable of coming, but will come. But instead of pushing for peace, Joe Biden and his minions just keep escalating the conflict, as we talked about last week. Remember? Last week's pre-market PulseWave report, we talked about how the government wants to keep the war going because they benefit. So if we continue down this path, it will end in a nightmare. All right, just something to think about. But then again, the reptilians, because they're acting like reptilians, the reptilians want global calamity. They want chaos. They want thermonuclear war. They want all the nations of the earth to be going ham on each other. That's what they want. They want it, they want it, they want it, they want it. Because they know that out of their chaos comes their solution. So they want to present you with their solution. Their solution. Okay? Just saying. You need to think about these things the way they think about it. Look at it from their perspective. You know what I mean? Just something to think about. All right, going forward. Just something to think about. And in the meantime, I will keep you abreast on what's going on with these markets. But as far as the global catastrophe, we are definitely looking down the end of the double barrel shotgun. All right. Or should I say the sawed off shotgun? We're looking down the scope of the double barrel sawed off shotgun. All right. And the person on the other end holding the gun is a maniacal, ruthless maniac. Okay. So think about it. Think. Where are we going from here? I told you guys even before this news, erupted that Putin had, invaded. Remember I said that there was war between the elites of the world. They are beefing with each other. One branch wants to let things take their natural course and help the people. They don't want a violent, thing to happen. They don't want that. They don't want to really hurt people. They want the New World Order. I know that sounds weird, but they want the New World Order. But at the same time, they actually believe that this is a good thing and that it's going to help humanity, right? Because that's what they've been conditioned to believe, right? But, and I do say but again, the other side, they want scorched earth. They don't care because they believe that in order to bring about the New World Order, there must be total destruction. They want to depopulate the earth. All right. They want total annihilation. That's what they believe, and that's what they want. Whether you believe it or not, or want that or not, to them is immaterial. They believe they have the divine right to have their way, whether that way is good for people or not. It's all about them. All right. It's all about them. And you need to understand that as you're going into the voting polls. All right. You need to understand that the only way to upset this horrific agenda is if you decide to vote all the incumbents out of office. That's the only thing you can do. But the people will have to do it as a whole. A handful of people doing it will not have any effect. The nations of the world, the inhabitants of the nations of the world would need to do that. You would need to vote them out of office. Now, I've mentioned that before. To no avail, the majority of the people voted Democrat or Republican. They did not vote any other way because they, the college educated, were told in their political science class that you're throwing your vote away if you don't vote for the system. You have to vote every time to keep the system going that is against you, by the way, by voting for it. Because if you don't vote for it, you are voting for it. Now, tell me if that makes any sense. But yes, you political science majors, you know exactly what I'm talking about. You know your professor told you about, quote unquote, throwing away your vote. If you don't vote Democrat or Republican, you will automatically vote Democrat and Republican by not voting for them. You see the Jedi mind tricks that the universities play on their students? And then they even tell you, well, because that person can't win. Really? Says who? Remember, these are the same people. These are the same university professors that said man, what's his name? I just had a brain blank. Donald Trump. These are the same people that told you Donald Trump cannot win and that it was a joke. He was just doing that to take, votes away from Hillary or whatever he was doing at the time. And again, these are the same people. Don't forget, the money people came in and chimed in. Remember, there was, the spread bettors, all right, the bookies even came on live TV and said because at the same time that the vote was going on, the Brexit thing was happening. They said that the Brexit thing was also a done deal. And if you were betting, that you were a fool if you bet against it. Remember, they said that on this night, on this day, it is a done deal. It's happening. The odds are overwhelmingly against you. And when it didn't happen, did they bring any of them back on with egg on their face to explain themselves? Nope. The mainstream media's job is always to mislead the public. Don't you ever forget that. Their job is to mislead you. Think about their institution of enslavement. What is the institution of enslavement? Well, the government is such a large beast with mad tentacles, so it has to have arms and things to do its bidding. So the government uses their mainstream media and their universities. That's how they control the people. The mainstream media gives you the talking points and the narrative, and they keep saying it over and over and over again until it's ingrained in your psyche. Then when you go to class every day at your institution, doesn't matter if it's Yale, Brown, or some local community college, any professor that wants to keep their job or is hoping to gain tenure will toe the line and stick to the talking points and the agenda and not deviate from it. And so they ingrain it into you nonstop, 24/7. But they don't want to rely on odds and chance. So they have to secure their victory. So they start coming at you hardcore in public school. So public school reinforces the narrative. Then after they brainwash you for 12 years straight. You go on to college and university where they're going to submit that brainwashing. But they don't just leave it to chance, because they know that some people don't pay attention in public school or even in college and university. So they can't just rely on that. And they know most people don't even listen to news and watch the news where they're giving it to you 24/7. So they have to reach out to the rest of the world in other ways. So they also control Hollywood. So they make sure that TV shows and movies and cartoons are pushing the agenda as well. All right. So that is how the public continue to do what the system that is controlling them and wants them to do. And they can never break their programming. The Matrix movie was trying to warn people about their reality. You are living in a matrix. You dig it? But it's a system of control. It's not an augmented reality. It's just you're walking through reality with, these shades, these glasses that have you to see what they want you to see. You dig what I'm saying? Just like that one movie that Roddy Piper played in. What is it? They Live. Remember that? He had to put those shades on if you wanted to see. So that's what's going on here, folks. Okay. All right. So for the most part, that's all I got today. I just wanted to expound on, what has been going on, the things that I was seeing. I needed to address that flash crash that happened on the other side of the world, the one that people are not, looking at because they don't live there. So you're not going to get all that coverage. You have to, have someone to tell you about it so you can look into it. But I got to tell you, something big is coming. I told you about the global algo shift. And let's end it with that. We're going to end it on the global algo shift that I've been warning you about. All right. It's already starting to stick up its head. All right. Its ugly head is sticking up. It's peeping around. It's looking around. Want to know, can it come out and play? Okay. The question you're probably asking is, does the algo shift tell you the direction? That part, it does not. Okay. The algo shift doesn't necessarily tell you the direction. It just lets you know that an explosion's coming, either an explosion or implosion. All right. One of those is going to be true, and it's going to last for a very long time. The last major global algo shift that I warned about back in 2013 with the late, great Charlie McGrath from the Wide Awake news show, I explained that the granddaddy of all bull market rallies was about to become upon us. Well, look at the price of the Dow in 2013 and look at the price of the Dow today, and you let me know that the grandfather of all rallies not just take place. The go-go 90s pales in comparison. So I want to leave you with this. Let's just think about this just for a minute. I give you the PulseWave reports. I give you the end-of-day reports. I give you my trade journals. But now let's just look at a few factoids regarding the current market conditions and ask yourself, is this finally the end for America's greatest stock market bubble in its history? Yes, we just finished talking about the many different multifaceted problems with the economy over the last 12 months. Yes, many Americans continue to believe that everything would eventually be okay because stock prices remain stubbornly high. Remember, I warned you years ago. I said the worse the economy gets, the higher the Dow will run. That has played out. But now the stock prices are starting to correct, or if you want to be more blunt, crash. The cold, harsh reality of what we are facing is starting to set in for millions upon millions of people. Trillions of dollars in paper wealth has already been wiped out, and many experts are warning that the worst is still yet to come. I've always kept you abreast of what's happening in these markets because that's what I do. But this past Friday, the financial carnage that was witnessed was quite impressive. You see, the tech-heavy NASDAQ composite fell nearly 4.2% to 12,334.64, and that weighed down by Amazon's post-earnings, which plunged. The S&P 500 retreated by 3.6% to 4,131.93. The Dow Jones Industrial Average shed 939.18 points, or around 2.8%, to close at 32,977.21. Of course, this was just a continuation of a trend that has been developing for quite some time. Those that are subscribers to the PulseWave reports, your dashboard has been warning you about that. You've been shorting this market with me and enjoying yourself. However, April was the worst month for the S&P 500 since March of 2020. And it was the worst month for the NASDAQ since the financial crisis of 2008. For the year, the Dow has fallen 9.3%. The S&P 500 has dropped 13.3%, and the NASDAQ has plunged 21.2%. Overall, the Dow is now down 10.8% from the all-time high. The S&P is down 14.3% from the all-time high, and the NASDAQ is down 23.9% from the all-time high. Tech stocks were on the bleeding edge of this stock market bubble on the way up, and now they're also on the bleeding edge of the crash on the way down. On Friday, the price of Amazon fell 14%. That represented the largest single-day decline for that stock going all the way back to 2006. Now, as a result, Jeff Bezos is now $20 billion poorer. Poor Jeff. Jeff Bezos saw $20,500,000,000 of his fortune melt away after Amazon.com results left investors disappointed, helping fuel the worst month for the technology stock in years. Can you imagine losing $20 billion on a single day? When asked about the market, Jeff Bezos was rather philosophical. He said, most people dramatically underestimate the remarkableness of this bull run. Such things are unstoppable until they aren't. Markets teach. The lesson can be painful. Of course, it isn't just Amazon that has been plummeting. All of the major tech stocks have fallen by double-digit percentages from their all-time highs at this point. Since last November, FANG stocks have collectively lost more than $1.6 trillion in market capitalization. That is one huge pile of dough. On Friday alone, the 500 wealthiest people on the planet lost over $54 billion. The world's 500 richest people lost a total of more than $54 billion on Friday amid the broader market rout, according to the Bloomberg Index. But not everything is going down. April was actually the best month for the Russian ruble since 1993. Needless to say, Joe Biden's promise to crush the ruble has not exactly gone as planned. As for our financial markets, we are being told that there is a variety of reasons why they are suddenly imploding. Quote, the market is worried about a very fragile economic outlook, as it should be, said Joe Livorna, chief America's economist at Natixis and former Trump White House economic advisor. Quote, the economy is fundamentally soft. The Fed is going to hike next week. The situation in Ukraine is not getting better. And high inflation is cutting into cost, end quote. And many a warning that even darker days are ahead. For example, the following originally comes from John Hussman. Buckle up, Buttercup. The most challenging financial event for investors in the coming decade will be the repricing of securities to valuations that simply adequate a long-term returns following more than a decade of reckless and intentional Fed-induced yield-seeking speculation. Well, you guys already know about the conversation regarding stock valuation ratios. Well, you know about all that nonsense. But there's also a danger that stock prices could ultimately fall much lower than what is expected. In 2022, we have been hit by one crisis after another. Who was that told you they saw the United States dying death of 1,000 cuts? Oh, that was me. A major land war has erupted in Europe. We have been hit by plague after plague, and we're being warned that we're heading into the worst global food crisis since World War II. We're definitely in the midst of a perfect storm, and we get more bad news with each and every passing day. In fact, we just learned that a man in Colorado has the H5N1 bird flu virus. The following comes from the official CDC website. A person has tested positive for avian influenza AH5 virus H5 bird flu in the U.S., as reported by Colorado and confirmed by the CDC. This case occurred in a person who had direct exposure to poultry and was involved in the culling, another word for depopulating, of poultry with presumptive H5N1 bird flu. The patient reported fatigue for a few days as their only symptom and has since recovered. The patient is being isolated and treated with the influenza antiviral drug Oseltamivir. I can't pronounce it. I'll spell it. It's Oseltamivir. While it is possible that the detection of the H5 bird flu in this specimen is a result of surface contamination of the nasal membrane. That can't be determined at this point, and the positive test result meets the criteria for an H5 case. The appropriate public health response at this time is to assume this is an infection and take actions to contain and treat. Approximately 35 million chickens and turkeys have already died during this new pandemic, but bird flu does not normally spread easily among humans. However, if bird flu does mutate into a form that can spread easily among humans, everything will change. All right. The medical crisis that we are currently still in completely paralyzed our society, but it has a death rate that is well below 1%. The CDC says that the bird flu can have a death rate of up to 60% in humans. And so we better hope that widespread human to human transmission does not become a reality. So we're going to be keeping our eye on this one. All right, ladies and gentlemen, that wraps this up for this edition of the Pre-Market PulseWave Report. Hopefully, you got something out of this, as we always seek to find answers and reasons, causes and effects, and we always try to find what's going on behind the news, not just what shows up in the news. Because as you know, news can be slanted, twisted, made up, whole bunch of stuff. All right, so we just have to talk about these things. And when they come up, we do it. And that's what we do here. So hopefully we'll see better days ahead. I'm rooting for that. I hope so. But because we live in a world that is ruled by totally wicked individuals, that will probably not be true. All right. So, yes, Iran and Venezuela are about to sign an energy deal, according to Bloomberg. So, we'll see how that goes for the price of crude in the near future. All right. Hope everyone has a great day. See everybody in the trading room. Don't forget to smash that like button. And remember, bulls make money, bears make money, and pigs get slaughtered. So remember to take what you can and give nothing back. And I am out. Peace.